Hey, Single Roses, welcome back to I Buy My Own Roses podcast. It is me, Ariel. I am so glad that you are here and I hope you are doing well. Today, we have a fantastic episode tailored for all the single women out there looking to make their mark in the real estate market. Joining us today is an exceptional real estate agent who has not only mastered the art of helping people buy and sell homes, but is also passionate about empowering single women on their journey to home ownership. She's a seasoned professional with a wealth of knowledge and a proven track record for turning home buying dreams into realities. As an expert in the field, she's going to be sharing with us some invaluable insights and tips specifically tailored for single women navigating the exciting path of purchasing their first home. So without further ado, I'm going to go ahead and let her introduce herself to you.
Hi, everyone. My name is Ariel Austin. I'm from Asheville, North Carolina, currently reside in Charlotte, North Carolina, and I am a local real estate agent who services North Carolina and Georgia.
Can you tell me what are the benefits that you find for people buying homes as a single person?
So, there are several benefits to buying a home as a single person. For one, you are starting to create generational wealth. And then in the event that you do partner later, your mortgage is usually based off of one income. Of course, like when you are a partner, you have two incomes. So it would open up some income to use that money towards something else. A lot of times people will get an investment property based off the other partner's income later. So several things, but of course, real estate builds generational wealth. So the sooner that you can get into the real estate market, whether you're single or, some people do wait until they get into a relationship. For me, I purchased when I was, well, I still am single, but I was single when I purchased my first home. And I've seen it grow a lot in equity over the years. So, in the event that I do plan to purchase in the future, whether I purchase single again or I purchase with someone else, I have equity to use towards that purchase. So, yeah, that's just some of the benefits.
Do you feel that people who are single have a lot of myths around buying a home, or do you see that they're like very fearful around it?
I think so. And I think a lot of the times what happens is like we kind of grow up seeing one thing or hearing one thing. So a lot of times home buying is associated with you getting married or you having a spouse and y'all purchasing together, which that's fine. Like if you plan to purchase when you get married, that's perfectly fine. But I think a lot of people think that they can't purchase single. So I have a post called Skip the Spouse Buy a House, and I post it yearly usually. But it basically just kind of explains the benefits of purchasing single. And just to break that myth up, like you don't have to be married to purchase a house.
If there's someone who's listening who wants to purchase a house, what would you say their first practical step would be to purchasing?
So definitely contact a real estate agent just because a lot of the times you don't know where to start. So a lot of times I've heard people say that they will kind of talk to a real estate agent and they'll be like, okay, like try to rush them into pre-approval. I definitely don't do that. And that's kind of something that you want to look at when you're looking for a real estate agent is somebody who's going to kind of hold your hand, especially if it's your first time and let you know the ins and outs of home ownership and what that looks like. It varies per state, but of course, you need to know how much you need to save, what happens once you do go under contract, once you do start your home search, what out of pocket expenses are expected during the process, because a lot of people don't know about that. So definitely find a real estate agent that aligns with you, that you feel like you can work with, because y'all are going to be spending a lot of time together. One that educates you on the process, makes you feel comfortable during your process, and then can provide those resources like a lender. You want to start with a resourceful real estate agent to kind of walk you through the process step by step.
Yeah, and can I just add that based on my own personal experience, I would highly recommend that whatever realtor you're going to be working with, you work with the lender that works with that realtor.
Definitely. Just because a lot of times things do come up, we know the lenders that we work with and we know how we work with them and what products they're providing and things like that. And a lot of times when you go out of network, when you have things come up, it's hard to work with lenders you don't know or banks who have different regulations and things like that. So we build those relationships for a reason. So I agree with you 100%.
How can somebody become financially prepared, or what might a lender be looking for from a single person when they come to get pre-approved?
Okay, so first, getting out of the habit that you and your significant other, if you have one, y'all's name both has to be on the deed or the mortgage. So when getting pre-approved together, which this kind of goes to the question that you're asking, if you're purchasing with another person, they're taking the highest debt to income ratio and the lowest credit score. So if me and you are purchasing a house together and you have an 800 credit score and I have a 620 credit score, they're going to take that 620 credit score,
Oh, okay.
and that will be the credit score that they're using to pre-approve us for the loan. If I have a 50% debt to income ratio and you have a 43% debt to income ratio, which is where it needs to be at about 43%, they're going to use my 50% debt to income ratio. So they're going to take the riskier person's profile and use that when two people are purchasing together, versus
Okay.
you, if your profile is perfect, you can apply for it and that's what they're going to use towards your loan versus the other person. Even if you're in a relationship, you can still purchase just as one person if
Yeah.
you have the better profile. I think I mentioned this earlier, you're buying it based off of one person's income. So that kind of eliminates, in the event that you are to get in a relationship later, y'all being debt heavy, or what's called becoming house poor, because if somebody was to lose their job or something like that. So also, if you purchase a home single and you do enter a relationship later, the other person, if they haven't purchased a home yet, they are still eligible for a first time home buyer loan if you want to go that route. Anytime you purchase as a first time home buyer, usually even if you aren't going down payment assistant, you still have your benefits of putting 3% down or 5% down, versus when you buy an investment property, you're putting 15 to 20% down. So there's several benefits talking to women, since that's mostly your platform. Coming from a woman, I think it's important that we just have our own things. We just should have our own things in the event you get into a situation. This is coming from somebody who is divorced. I luckily had my own property and things like that. So when I was in a situation where I needed to peace out, I was able. We don't ever hope that we get into situations like that.
Right.
But in the event that you do, it's just important, I think, for women to have their own assets.
I completely agree with you. And that was definitely one of the things that I was thinking about as well when I decided to start the purchase of my home. Have you seen situations where there is a couple, but that couple kind of like has their own things and they live separately?
So I have several clients who have done that because they're not married yet. So actually, my first client, she purchased a home and they lived in it. And then he purchased a home and she moved away for a little bit and he lives in that home. And she's purchased another property, which plans to be like a forever property. So when they do get married, they have choice. Some will be investment property, some will be a property that they live in. Another couple that I worked with, she purchased her own property. They lived in it. They got married. Then they purchased a home together and now they're renting that property out.
Yeah.
Now, on the flip side of things, I've also seen two people purchase a home together. They weren't married and they broke up. And when they go to sell the home, anytime you purchase a home in North Carolina and you are not married, you're co-owners, which means no matter how much money one person has put into the house, y'all are splitting it 50-50 at closing unless stated otherwise. They weren't too fond of each other. They were not having a clear and smooth breakup. So one person felt like they should get this much. One person feel like they should get this much. However, there was no agreement in place of, in the event that we do break up and we don't work out and we don't get married, this is what's going to happen to the property. So it was a back and forth, because law says that if you are co-owners of a property and that you aren't married, it's 50-50 down the middle. So if you are thinking about purchasing property together, it may be smart to get like an attorney to draft some sort of cohabitation agreement that in the event that it doesn't work out, this is what's going to happen. It's three sides to every story. So unless there's an agreement in place, if you are not married, the proceeds from that house when it sells will be 50-50.
That reminds me of the movie The Breakup. They purchased a condo together and then they broke up and they were trying to sell the condo and it became a mess and both of them wanted to stay in the condo. It was awful. So,
Yeah, I'm gonna have to
yeah.
watch that.
Yes. Okay, as a first-time home buyer, I know that at first I was kinda looking for the aesthetics. I
Mhm.
was looking for a location. I was looking to see if I would be able to find something that was kind of affordable. I wasn't looking for long-term red flags when it comes to a home and like how certain things with houses are going to cost me more money in the long run.
Mhm.
So I'll give you an example. When I first moved into my house, there were cracks in the ceiling. And
Mm.
when I spoke with the contractor, they came in and they like covered it up, but then like a week or so later, the cracks came back. So there was like a greater issue. So even after I had the contractor initially fix the cracks in the ceiling, I had to hire somebody who specializes in ceilings to come in and like really go in and fix it and level the ceiling and do all of these things, which costs a pretty penny.
Mhm.
So my question to you is, as a first time home buyer, what are some red flags that people can look for that might cost a lot of money moving forward?
If I'm going through a house with my client, I'm usually looking at the seller's disclosure form. So usually they have to, well, not have to, because North Carolina at least is a buyer beware state, which means that the seller doesn't have to disclose anything. If the agent knows of it, they have to disclose it. But when I'm going through a property with a client, I look at the seller's disclosure first to see if there's anything that may indicate foundation issues, HVAC issues, furnace issues, electrical, plumbing issues, and then roof issues. So I'm looking at the age of the roof, the age of the HVAC, things like that, because usually those are your most expensive repairs, things that have to do with the foundation, or if you have to replace an HVAC system. Roofs are expensive now, and any crazy water damage that has happened. Usually those are the things that are going to automatically be super pricey. Anything after that is usually somewhat cosmetic. Especially with older houses, if you're walking through the house, I look for cracks that are not like hairline size. Floors, are they level, especially like if it's on a crawl space? And then of course cracks around the ceiling, things like that, because usually that's going to indicate that there's a foundation issue. Another easy way to look for a foundation issue is in an older home, if you are looking at a door and there's cracks below or on top, like the door just looks like it's not even, or there's cracks in the door, that usually sometimes can indicate a foundation issue too. Not always, but those are like common signs that there may be a foundation issue. So I'm usually talking my client through the walkthrough, like what I'm looking for, what I'm looking at. So, they can also look, and if they have a question about something, they can point it out and we can ask further questions to the listing agent. But it's also about getting to know your client too, because sometimes their budget may not be as high, or like, they have a certain number in mind for a mortgage payment.
Mhm.
But it's like, oh well, I have an extra, this is what I want my mortgage payment to be, but I have an extra $10,000-$20,000 to put towards repair. So it's like, okay, well, what are you comfortable with repairing and what are you comfortable with not repairing? Like in the event that your HVAC breaks, will you be comfortable replacing that? So a lot of times it's just having those conversations and getting to know my client to see what they would be okay with repairing. Because some houses, it's like, okay, like this is cute, but it needs upgrading. Like, well, okay, we can throw some paint on the walls and get you some new cabinets and things like that. So I think it's just really big to know your budget. A lot of my clients will go to new construction because they're like, we don't want to fix anything when we move in. We just want it to be move-in ready, which, things come with new construction too. No house is perfect. So it's just a matter of knowing what your budget is for a mortgage, knowing if you're willing to make upgrades, if you're willing to go, a little lower in price so you get a better mortgage payment and you have some reserves to do the repairs. And then, of course, doing your due diligence on the actual house to see if it's a good fit.
Have you seen that sometimes first time home buyers are also a bit unreasonable in their expectations of what
Very
they can
much
get?
so.
Yeah.
So I always say your first house is 9 times out of 10. Sometimes it is somebody's forever home, but especially like us millennials, it's not. 9 times out of 10, this is not your forever home. So you kind of have to switch your mindset to an investor mindset. Like this is an investment. It's not something that you're going to live in forever. So it's not going to have everything that you want. And I had to humble myself because I wanted a ranch style house with a nice backyard. I wanted all my upgrades. I ended up in a 2-bed, 2-bath condo. It was cute and it was upgraded, but it was not what I wanted. But that's my investment property now, and it brings me income in every month. So sometimes you really have to humble yourself. Like, okay, I'm not going to be here forever. And comparison is the thief of joy in every aspect, because you do see people your age getting houses that are completely upgraded and decked out and things like that. But I always tell my client, just look at it as an investment. Like, it's not going to be perfect. If it's livable, if it's safe, if you feel comfortable in it, if you can do upgrades as you go and you can afford it, then just look at it as something that's going to bring you income later, whether you sell it or you rent it out. And usually by the time you move out, you usually have enough equity built in it to where it's purchasing the home that you actually want the next time.
Can we talk about the interest rate? I know that's like such a huge deal. I've heard people online kind of talking about how it's the thing that stops them from buying a house. So, what are your
Mhm.
thoughts on the interest rate and how much should a first time home buyer be considering this rate when they're going into purchasing, especially if we're going to consider what we're buying just an investment before we go into our next purchase?
So the interest rate is scary. I get that, because it has scared a lot of people out of home buying. But if you can afford to purchase a home, then you should do it and not consider the interest rate. Reason being that interest rates are always going to fluctuate. So we've all seen the articles of saying interest rates are supposed to drop 6 times in 2024. We're not going to see them where they were during the pandemic when they were in the twos and the threes and the fours. If we see them drop, it'll probably be like in the five. But if you can afford to buy a home, then I definitely encourage you to do so, because interest rates will fluctuate. If you get in and your interest rate is higher than what you want it to be, as you pay on that loan, as you continue to improve credit or things like that, and they drop, you can always refinance. But the prices of homes are going to continue going up. Also, when interest rates drop, the markets become more competitive. So interest rates are high right now, but I have been able to negotiate $120,000 off of a house. I've been able to
Wow.
negotiate people's closing costs. I have been able to negotiate repairs. Sellers are a lot more lenient right now. You know, you can get closing costs, you can talk them down on price. They're sitting a little bit longer. Not that anything is wrong with the house, it's just a little bit of a slower market because there are less people in the market right now because of the interest rate is so high. If you can get into purchase now and you can afford a mortgage payment, it's a great time because we can negotiate those things. What's going to happen when the interest rates drops is it's going to be maybe not as crazy as it was during the pandemic, but it's going to open the market to thousands and thousands of buyers who were not able to purchase at this interest rate. So what happens is you have multiple offer situations again. You have people doing higher due diligence, higher earnest money. People are being more competitive. So it's going to also throw a lot of first time home buyers not out of the market, but it's going to make it a lot more difficult for them to get in houses again and negotiate the things that they want, because it's going to be a more competitive market. So what I always say is, of course, we don't want higher mortgage payments, but if you can afford it, get in, pay this, and then refinance later.
Can you explain a little bit about due diligence? This was something I had no idea about. I know North Carolina does it, but also do you know if any other states does it as well, just for people listening?
So North Carolina does it, and other states are actually getting into. I think South Carolina actually does it now. I just got licensed in Georgia. I know they do earnest money, but I think it's kind of more optional in Georgia. Like, they're not all doing it yet. But North Carolina is big on due diligence. So what happens is you have 4 out-of-pocket costs when you go to purchase a home. And I think you asked me this earlier and we kind of strayed away from it. So when you're preparing to purchase a home in North Carolina, you have your down payment and your closing costs, or sometimes there are some down payment assistance options. So outside of your basic down payment and closing costs, you have 4 out-of-pocket costs that you're responsible for as a buyer. That is earnest money, due diligence, and then your home inspection and your appraisal. Those prices vary. Your appraisal will vary per lender, because depending on which lender you go through, they'll tell you how much that fee is. During COVID, when we were having to rush, I saw them get up to $700, but usually it's between like that
Wow.
300 and 500 range. Same with inspections. Your inspections usually run about 450 to 475, let's say 500 for a house that's under 2,000 square feet. And then, of course, it can get a little bit higher than that as you get into your bigger properties. So your other 2 out-of-pocket costs is earnest money and your due diligence. So what happens is you find a house, you like the house, you're like, okay, I want to make an offer on this. And then you are going to put up due diligence and earnest money. They're both kind of the same concept, except one's refundable and one's not. They're good faith deposits. So it's basically telling the seller, like, hey, thank you for taking your house off the market. I'm going to do my due diligence and show you that I'm serious about purchasing this home by putting up this fee. That's due diligence. Earnest money is also a good faith deposit. The difference is it goes to escrow. So it's not really a super competitive fee because you will get that back. So when you go under contract and your offer is accepted, you immediately enter the due diligence period. And basically what's happened, that's when you get your inspection, you get your appraisal, and you can do any due diligence that you want to on the property, but you have the option to walk away if you decide that you don't want to purchase the home anymore. Now, what happens is you have a deadline for due diligence. So it may be 2 weeks from the day you go under contract at 5 p.m. If you walk away, like you say, I don't want this house anymore, you lose your due diligence fee because that's the money that you gave the seller to take their house off the market for you to conduct due diligence to purchase the home. If you close, then it's credited back towards your closing. And the same with earnest money, except the difference with earnest money is as long as you walk away within your due diligence period, you get that back. Both are credited back at closing. If you walk away, though, during due diligence, you'll get your earnest money back, but you forfeit your due diligence. So the way I explain it to a lot of people, just to make it make sense, is if you're going to get your hair braided, you put down a deposit. If you show up for your appointment, it's credited towards your total cost for your hair at the end. If you don't show up for your appointment, the stylist keeps it. Same concept with due diligence.
And it is rough because, especially if you don't have a lot of money, like when I went to go purchase my home, I didn't have a ton of money. So it added so much more stress to the process because I was scared. Like I had to be competitive with this amount of money because of the time I was buying. But I'm like, I didn't have a lot to like let go of in the event that I
Yes.
decided I wanted to walk away. And I think for me, even that fee and how much I put up, I probably wouldn't put up as much as I did for the house I'm even currently in, but it went into the decision for me to like actually purchase this house instead of keep looking. So it's definitely something that people should be mindful of if you're going to be purchasing and you don't have a ton of funds to purchase with.
Yeah, and definitely that goes into building a relationship with your realtor and asking questions too, because I'm not going to put in the same offer or the same amount of due diligence up for somebody who I know doesn't necessarily have it versus somebody who is okay with being a little bit more risky with money, because there's other ways you can get creative with your offer without breaking the bank or putting up all your money. So there's definitely ways to navigate. That's why it's important to ask questions. Now, during that pandemic, it was kind of hard. Like a lot of people's hands were tied because people were putting up $10, $20, $30,000 in due diligence. So you had to kind of be, it was a different time. Definitely.
So as a single person, I don't have children and
Mhm.
I really don't have family that I want to give my property to. In what ways have you seen people who are single? What do they do with their home in the event that they don't have children?
I think it's super important to have something in place saying what you want to happen to your assets in the event that something was to happen to you, especially with us as minorities. Like, I don't think that happens enough.
I think it's really important that people think about that because now, like, I've purchased a home
Hmm.
and I'm grateful to have it. Don't get me wrong, but now I am starting to ask myself those questions where I wasn't asking them before, or I didn't ask them
Yeah.
before I went into the purchase.
It's something that I've been thinking about more lately too. Like, okay, like what am I going to do with my things? If something, obviously I would probably leave it to my siblings, but every family dynamic is different. So
Mhm.
definitely something important to think about. And you can change wills and estates and things. It's just like, you get older or things might change, but it's definitely important to think about those things and have something in place saying in the event that something happens to me, this is what I want to happen to my assets.
If someone is in the North Carolina area, you serve Charlotte, correct? What areas do you serve?
So I serve Charlotte, North Carolina. I serve Triad, so Greensboro, Winston-Salem, Kernersville, Thomasville, like all those areas in between Winston-Salem and Greensboro. I go a little bit outside of Greensboro to Mebane. I don't go as far as Raleigh, but I do have some referral partners in the area. I also serve Asheville, North Carolina, and surrounding areas, so Buncombe County. And then I am also servicing the Metro Atlanta area now.
Congratulations.
Thank you.
You're welcome. So, if somebody wanted to reach out to you and work with you, where can they go to find you?
So you can find me on Instagram at Aries Corner. So AERISCORNER _ or on my team page at Austin Real Estate Group or on Facebook at Ariel Austin.
Thank you for coming today.
Thank you so much for having me.
Hey, Single Roses, this is post interview Ariel. I really hope you enjoyed that interview. I just wanted to say one thing that I forgot to ask her about, and that is protection when you purchase a home. One of the things I hear a lot of women say when it comes to buying a home is that they don't want to deal with the maintenance. And yes, the maintenance is a thing, it very much is. I own an older home, and so it has some issues, as cute as it is. For example, I am currently dealing with a leak from my chimney to my ceiling, and I had to go through my homeowner's insurance. I'm going to have to pay a deductible in order to get that fixed. So, yeah, home ownership requires some expenses, but there are some protections just in case something breaks down on you, which inevitably for most people, something is going to break down, something is going to go wrong. Even if you choose to use your house as an investment property, you are going to be responsible for the maintenance of that property, even if you're not the one living in it. So, there are two things that I personally have that I have found comfort in. And first is the homeowner's insurance, which is mandatory anyway, but it is there. The other thing is a home warranty, and the home warranty covers things like appliances. So, like my stove, my water heater, my HVAC. There's like a whole list of things that it covers. Don't be afraid of the maintenance. There are different things you can do. Even if you do have issues, it's okay. If something comes up, you just call whoever you have to call to come and take care of it. Just like if you had, an issue with your tooth and you had to go to the dentist, you pick your own dentist that you think would do good work, and you pay your copay to get your tooth taken care of. It's the same thing. So don't let the idea that something could go wrong intimidate you from purchasing a home. I'd rather just pay for a repair here or a repair there as it comes up. And again, have those protections in place, like the home warranty, to help with the cost. So even though my home has some issues, I think for me it was a good investment, and like the protections that I'm able to have in place, I feel comfortable being able to take care of things as they come up. I do. So I would just consider that there are things out there to help you minimize the cost. When I was leaving my apartment, they were trying to increase my rent like $400. That was going to be 400 extra dollars I was going to have to pay just in rental costs. And it's like my mortgage not even going to be that high. So yeah, I'm going to have to pay for a repair here and a repair there. But at the end of the day, like once I buy a new water heater, it's going to last so long. If I have to replace the HVAC, which at some point I'm going to have to replace the HVAC, I'll have it for so long. I'm not going to have to do it for a long time. Don't get overwhelmed with the idea that something might break. Yeah, something is going to break. It is going to break. And when it does break, you'll have protections in place to take care of those things. There are options out there. So, yeah, I just wanted to add that. Thank you for listening, and I will talk to y'all in the next one. Bye.